Dear students, welcome to our new lecture. In our today lecture, we will discuss about the explicit, implicit and the sunk cost. Basically, explicit and implicit cost concept which makes the accounting and economic cost different from each other and also the economic and accounting profit from each other. Explicit cost is the cost that transaction is measurable and is recorded in the expense sheet or the balance sheet. For example, explicit cost contain the purchase of new assets. For example, you are buying a new machinery. So when you are buying new machinery, you have to pay the amount of money or pay the price against that machinery. So you can see the cost. Similarly, when you are hiring new workers, so in order to hire new workers, you must have to pay them wages, which is your expense, and you can see that expense. And so on, purchase of raw materials. When you are purchasing new raw materials for the production process, then you must have to pay an amount or price for that raw material. So the idea is that explicit cost is the cost which you can see by yourself physically. But on the other hand, implicit cost is the cost which is not measurable and you cannot see the cost. A decision which leads to lower income but is not recorded on balance sheet, that is called implicit cost. We also call it as opportunity cost. For example, when you are giving your workers a day off as a bonus, so this will reduce your production and as a result your sale decreases and ultimately your revenue and your income also decreases. So you have bear a cost which is not recorded, but you have foregone the amount of income which you can earn if you did not give your workers a day off. But now you given a day off to your workers, so this will cost you, and this cost is called implicit cost or the opportunity cost. So the general idea behind the explicit cost and implicit cost is that explicit cost is recorded and implicit cost is not recorded, and explicit cost values can be seen but implicit cost cannot be seen. So when we are discussing about economic cost, we are considering both explicit and implicit cost, but in accounting cost we did not include implicit cost, we only include explicit cost. So that's why accounting profit is always higher than the economic profit, because in accounting profit they did not include implicit cost, they are including only explicit cost. That's why the profit is always higher than the economic profit. The next one is the sunk cost. Basically, the sunk cost is a cost that cannot be recovered. For example, if you take a land on rent from some person and you have built a factory over there, and after the end of the agreement, when you are leaving that land to the owner, the money you have spent on the construction of the roads or the construction of that building, you cannot recover that cost. You can destroy the road, you can destroy the building, but you cannot recover your that cost which is being spent on the production of the building or on the road. So the sunk cost is the cost which is not recoverable, that is called sunk cost.